Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Nimesh, Shah and Heather Self.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Nimesh Shah, CEO of Blick Rothenberg.
And I'm Heather Self.
I had to wrap up in my big coat last week as the big chill took hold, but the weather's got a little bit nicer, but things remain a bit frosty for our Chancellor, Rachel Reeves. Our director, Robert Salter, suggested in Rachel Reeves' New Year's resolutions, she might be regretting how the budget was framed and talking the UK down. And the winter fuel allowance and national insurance rise is the gift that keeps giving, and it still won't go away. Week 3 of the new year of 2025, and tax, once again, is the hot topic. And today, tax dominates everything, doesn't it, Heather? Because today is 31 January. We have to get our tax returns in. Heather, have you done your tax return?
Did mine last week, Nimesh. How about you?
Last week, I expected you to have done it early in the summer, Heather. That's a bit later than what I expected. I have to admit, I haven't done it yet. I've largely done it, though, so I have been pretty good. I just need to attach a final PDF and press the send button. So I'm in good order, I think.
That's good. And as you say, by the time this goes out, we're going to be right up to the deadline for 31st of January. So if anybody hasn't done their tax return yet, listen to us for about 10 minutes and then switch us off and get that tax return done.
And if you are doing your tax return, Heather, if you haven't done it yet, any final last-minute tips? It might be a bit too late, but what would you recommend for those last-minute filers?
Make sure you've got all your information together before you start, because actually filling it in isn't the difficult bit. It's finding all the bits of paper or emails that you need. So make sure you've got your P60s or your P11Ds or your sets of accounts. Of course, for anybody who's self-employed, it could be quite a tricky tax return to do because we're starting to get these transitional periods for changing the year on which you're assessed. I noticed that Paul Lewis was complaining on social media last week that he was finding his tax return very difficult this year. A couple of specifics: making sure you're claiming relief for any pension contributions, making sure you're claiming relief for charitable donations. Anything else you'd add to that, Nimesh?
Yeah, some really good stuff there. I think, look, don't forget your capital gains. The stock markets took a bit of a bump during the tax year 23-24. So you might have made some capital gains if you're fortunate enough. Things like Nvidia stock or cryptocurrency. But also, don't forget your losses. You do have until the 5th of April 2025 to make any capital loss claims arising in the tax year 2020-21. And I think that's often forgotten. And the final one is, don't forget to pay your tax. The current HMRC late payment interest rate is an eye-watering 7.25%. I remember not long ago, it was around the 3% mark. So that's jumped up hugely, and it can be very expensive for people not paying their tax on time. Also, watch out for those scams as well. I said before, Heather, I haven't filled in my tax return or I haven't submitted it yet, but I've been getting daily text message alerts and daily emails from HMRC telling me to fill in my tax return. And they are right to do that. And I've checked, is this a legitimate source? And I haven't clicked on any links. These are genuine messages from HMRC because they are rightly telling me I haven't filled in my tax return. But there's a huge number of scams out there about telling people that they're due a refund, they haven't paid their tax, and they need to pay a penalty and asking them to click a link to make a payment. So do be vigilant at this time of year because there is a lot of noise out there.
HMRC will never send you a text message or an email with a link to click on. What you should do if you want to check your tax position is log on to your personal tax account on gov.uk. And the other thing which they will never do is ring you up and say they're going to come round tomorrow and prosecute you if you don't pay your tax and try and get you to give them an iTunes gift card. Just don't do it. They're really horrible, these scams. I get very cross with them.
And if you are pressing the button later and you come up with a tax bill at the end of the calculation, then you might want to think about your tax planning for this tax year. And a bit of a plug, Heather, our Blick Rothenberg personal tax planning guide went live this week. So you can go on the Blick Rothenberg homepage and have a look at what planning you need to get done before the end of the tax year. You've got a bit of time. And speaking then of people that will need to do planning, it's my hot topic, non-DOMs. And they will have another year where their tax return filing should be a bit more straightforward because they've got this tax year where the remittance basis claim still applies. But from the 6th of April 2020, 2025, as we've well covered on the tax factor. Non-dom, no more. Big reforms to the non-dom regime. And this, again, is something that won't go away from Rachel Reeves in the news, because last week in Davos, Rachel Reeves was interviewed by the Wall Street Journal at the World Economic Forum, and she seemed to suggest that she was going to change some of the final rules on the non-dom reforms, make them more generous, relax some of the provisions, because she acknowledges that lots of millionaires are leaving the UK. But when I looked around and I asked some of my colleagues and some of my peers, I couldn't really find anything. I think what Rachel Reeves was getting at is some very technical refinements to the temporary repatriation facility, this ability to bring money in to the UK at a flat rate of 12% or 15% in the later year. I think it's going to make it a little bit more generous or easier to do, but it's hardly groundbreaking stuff. And the other thing that Rachel Reeves told us, which we already knew, is that the UK's network of IHT treaties, inheritance tax treaties, they will all remain under the new non-dom rules. I don't think this is going to really move the needle. I also don't think that many non-doms are leaving the UK as once feared. I did see a big wave during the summer of last year, but I think that has tempered down. But again, I don't think Rachel Reeves' comments are going to do anything to reassure those that are looking to sunnier shores. And maybe they're looking to sunnier shores because they are worried about the direction of travel in the UK of taxes on wealth. And again, Heather, you spotted something this week, that some noise on social media and from factions of the Labour Party around a wealth tax.
Yes, this was a topic that was being discussed a lot a year or so ago in the run-up to the election. And there was a big piece of work done by an independent body who called themselves the Wealth Tax Commission. And that included Emma Chamberlain, a very well-respected barrister, Aaron Advani, who's a tax academic. And they really did a thorough job of working out, if we wanted to have a wealth tax, what should it look like and how much money would it raise? Now, what's happened in the last week or two, I've kept seeing little messages from, there's one Labour MP, I think, and also Unite the Union saying, why don't we have a wealth tax? If we just had a wealth tax of 1% on the top 1%, it would raise some enormous number. Now, the work the Wealth Tax Commission did show some large potential numbers, but the numbers that are being bandied around now are at least double those numbers. And I just don't believe them. And every time I see it on social media, I post a reply saying, that's interesting. Your figures aren't the same as the Wealth Tax Commission. Where do your figures come from? And I've not had an answer yet. I don't think it's a current project of Rachel Reeves. She might get very tempted because it does in some ways seem easy money if you just swipe a slice from the very wealthiest. But there are some difficulties with the wealth tax. Firstly, it might bring into the net a lot of people who wouldn't really think of themselves as wealthy, but the total value of their house and their pensions might take them above the limit. And secondly, there's an awful lot of calculating to do. It could get very complex very quickly, and most other countries who've had a wealth tax have got rid of them in the end. So I think it's stirring the pot, but probably won't come to anything.
I completely agree with that. And also, new taxes are very difficult to introduce practically. And by the time you design it, by the time you create the system to actually collect the tax, train the HMRC inspectors, create the forms to report this, you're out of government. You're not actually reaping the rewards of potentially some of the big numbers that are being thrown around there. And Rachel Reeves has come out a few times now and said, we're not looking at a wealth tax. I agree with you, Heather. I don't think it's going to happen in this parliament, but it must be hugely tempting, especially with this backdrop of trying to raise more taxes through capital taxes and doing things around the edges on BPR and increasing CGT by a few percentage points. That's not really going to get you there. If you want to do the big sledgehammer, then I can see why a Labour government, a Rachel Reeves might be very tempted, but I think it's a lot of work and there's lots of frustrations with it, as you say. Other things that have been really frustrating for a long time now for a lot of taxpayers is the loan charge. And you've been really close to this, haven't you, Heather, over a long time? And I suppose a semi-positive announcement on the loan charge last week.
Yes, there's a lot of history on this, which I won't go into, but broadly, in 2016, the government introduced legislation that meant that anyone who'd entered into a loan scheme, which is where you effectively got part of your salary as a loan that you never expected to repay, anyone who'd entered into that was hit by new legislation that was very, very difficult to get out of. And a lot of people squealed very loudly because they felt it was changing the law retrospectively, it was looking back too far, and there was a first review of the loan charge, which I was involved in, the Morse review, and that made some changes to the legislation. But even since then, this has rumbled on, and there are some people facing life-changing amounts of tax they have to pay. Now, some of those who shout the loudest probably knew what they were doing, but equally, there are are people who should never have been anywhere near an avoidance scheme and probably didn't realise they were doing an avoidance scheme. People like nurses, lower level IT contractors and so on, who were told if you want the gig, this is the way it's going to be structured. What's now been announced is a new review of the loan charge being led by someone who is a good friend and former colleague of mine, Ray McCann, a former president of the Institute of Tax. And what he's going to be looking at particularly is how do they unblock the settlements? How do they actually get this to an outcome that people won't like because nobody really likes paying tax, but can live with? And how can HMRC actually get through this enormous backlog of cases? So it won't go as far as a lot of those would like, but it will, I think, bring a very long-running saga to something like a reasonable end.
That's good news for, I suppose, the taxpayer and to a degree HMRC as well, that we're clearing through the backlog. I suppose well played James Murray, the Exchequer Secretary to the Treasury, who seems to be taking quite a lot of interest in tax. He said he would do, and he is doing, so fair play to him.
Yeah, he's now chairing the HMRC board, and certainly on the loan charge, I'm aware that he's listened to quite a lot of people before coming to this decision, and he's, I think, making sure that things start happening. So I think it's a very promising start from him.
And I wonder what James Murray thinks about council tax, Heather. You said he's taken a great interest in tax, but council tax specifically. And the reason I raise this is you shared with me a brilliant story about the Hollywood actor Mercer Boffey challenging in the High Court about whether he and actually the majority of the UK population should be paying council tax. This is a great story, Heather. Please tell us about what's been going on here.
His argument was a bit difficult to understand, but broadly it was because he owns the freehold of his house. An Englishman's home is his castle and an American's home is his castle if he lives in England, and therefore he's sovereign in his own house and should not be subject to any taxes, therefore the taxes are illegal. It's a wonderful argument, but of course it's complete rubbish, and he's been thrown out at the first tier tribunal in very short order, not least because if he was right, it will probably mean that 90% of the population didn't need to pay council tax either.
Yeah, and reading some of the notes in the article, the council tax at stake was just over £4,000 per annum. And the judge said, you've made some very eloquent arguments here, and I can understand where you're coming from, but actually, I'm not going to rule in favour of this because it would change the whole council tax regime in the UK. He didn't actually give a view on whether he was right or wrong, I think, reading the article, but fascinating direction. I wonder why he had the time and the inclination to go to the court to even argue this point for just over £4,000. Clearly, he's got more time than he knows what to do with.
You do see quite a lot of this sort of completely mad case, not so much on tax, but on things like planning and other things, where the people appealing claim that they are not subject to UK laws at all because of some bizarre theory of being sovereign citizens. One area to watch out for, and just really coming back to the loan charge, people will sometimes try and sell tax schemes on the basis that you won't be subject to this tax because when you apply this bizarre law of sovereign immunity, you won't have to pay anything. As we've said numerous times, if something sounds too good to be true, it probably is. Please look after yourselves.
And pay your council tax as well.
The Tax Factor from Blick Rothenberg.
This week, when she was asked if she can rule out taking tax and spending measures in the spring statement at the end of March, Rachel Reeves said the statement is 2 months away and a lot of things can happen in that time. We're here with you every week looking at events in the news to keep you posted on what may or may not happen.
As I said before, I don't think I can remember a budget that is still making news 3 months later. We need a spring statement to bury that autumn budget, but there could be some bad news round the corner for more tax rises, it seems, if Rachel Reeves keeping the door open. If you enjoyed this podcast, why not try our sister podcast, Brave Business, hosted by journalist and broadcaster Declan Curry. We've just released a new episode looking at the topic of the founder's mindset. How can founders become effective leaders, no matter what stage they are on their business journey? And what challenges might they face and what lessons might they learn along the way? And on this episode, joining Declan are Blick Rothenberg's lead on entrepreneurs, Mally Kinney, MiniClick founder and president Rob Small, and Simon Court, founder and chairman of the Value Partnership and author of The Founder's Legacy. And I was fortunate enough to play a game of pool with Rob, and yes, he did beat me.
We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen wherever is most convenient. We record and release them in less than 24 hours, so you always get the very latest news and updates. If you enjoyed the podcast, please subscribe and give us a rating or review. Next week, it's the second helping of Nimesh and a new voice on The Tax Factor, Ola Adigum.
And yes, I am really looking forward to welcoming Ola for his debut on The Tax Factor. Thank you, everyone, for listening. Have a great weekend.
Goodbye.
That's The Tax Factor. If you enjoyed The Tax Factor, please like, share, and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.